Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Pan American Silver stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, $6 billion market cap. They're trading at $16.61 a share, and they have 364 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have positive free cash flow in 2020 and 2021, although it is negative in 2022 and the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. Same thing, positive in 20 and 21, negative in 22 and the trailing 12 months. Maybe we'll get more color when we dig into their financials later. Revenue is a sales for the company, and that's gone up a lot from 1.3 billion to over 2 billion. Their revenue should track the price of silver. When we look at their stock chart later, we'll figure out if that's the case. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4. That's 6.6 billion. We discounted the numbers back to today using weighted average cost of capital. We get a value of the company of $5.5 billion. We divide that by 364 million shares. And we get a calculated stock price of $15. They're trading at $16.61, so they're trading at a 10% premium. It's a sell according to the model. I did a video on the company 7 months ago. They were at $16.29. My valuation was $16.56, only 6 cents off their current price. There are only 4 companies in the same industry as Pan American, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. So they do spend the most in CapEx out of the 4 companies. All the companies have a pretty low debt to equity ratio. They are higher than the average and median. They pay a really nice dividend, 2.4%, a lot higher than the other companies. It looks like silver isn't doing that great because 3 of the 4 companies have negative free cash flow. They are the biggest of the 4 companies, 6 billion market cap. The other 3 combined are lower than them. Their price to book is equal to the median. We can't look at that PE since they have negative earnings. Same thing with their price to free cash flow, negative free cash flow, so we can't look at that. They have a 3 price to sales. This implies their market cap is 3 times their revenue. Let's take a look at their third quarter report to shareholders. Here are some highlights. Silver production of 5.7 million ounces and gold production of 244,000 ounces. Silver production was at the low end and gold production was slightly below guidance. Revenue of 616 million, a net loss of 23 million. Positive 115 million of cash flow from operations. At the end of 2022, they had 210 million shares outstanding. Now it's 364 million, so they're adding a lot of shares. The main reason companies add a lot of shares is to acquire another company. They acquired Yamana Gold, and the cost of that acquisition was $4.8 billion. So that's a really big acquisition for the size of this company. Because they're not a $100 billion company, their market cap is $6 billion, so that's a pretty big part of their market cap. Their revenue for the third quarter is $616 million, almost double last year. They're a much bigger company than last year with Yamana. They had an operating gain this year of $62 million. Last year they had a loss of $22 million. But they did have a net loss of $23 million, which is better than last year of $71 million. Lots of operating cash flow, $115 million, more than double last year. They're spending a lot in CapEx, $77 million. Compared to 49 million last year. The 77 million capex is sustaining capital. Those are costs to maintain their current assets. Non-sustaining of 49 million. These are to upgrade current assets or acquire new one. And here's their production. 5.7 million ounces of silver, up from 4.5 million. 244,000 ounces of gold, about double last year. A little more zinc than last year, 9,500 compared to 8,900. Lead 4,900 and copper 1,200. The all-in cost of silver is 18 and the price of silver is 23. All-in cost of gold is 14.51. Price of gold 19.27. I think this week the ticker GLD hit its highest point, its highest price ever. Let's take a look at their balance sheet. Current assets of $1.5 billion. Current liabilities of $644 million. So their current ratio is above 2. $348 million of cash. more than triple last year, 150 million of receivables, and 700 million of inventory. The inventory is the gold, silver, and the other commodities. They have lots of property, plant, and equipment, 5.9 billion. Here's a breakdown of the 5.9 billion. It's right here, 5.9 billion. And it's all their locations, their mines. They break it down by producing mines, 4 billion, and non-producing, 1.9 billion. So their biggest mine is in Brazil. The value is 1.9 billion. They have 2 locations in Chile, 659 million and 100 million. 3 in Peru, 100 million, 470 million, 128 million. 2 in Mexico, 200 million and 100 million. 1 in Argentina, a small one in Bolivia, and a big one in Canada. For non-producing, their mine in Brazil is 400 million, the non-producing part. Total assets, 7.5 billion, more than double last year. In current liabilities, their biggest is accounts payable. That's how much money they owe companies for buying on credit, about $500 million. Their biggest liability is deferred tax liability, 733 million. These are taxes a company will eventually pay but are not due yet. Long-term debt of 700 million. Of that 700 million, 273 million is due in 2027 and 400 million is due in 2031. And most of that is from the acquisition. They call it an acquisition note. Total liabilities 2.6 billion, up from 1 billion. They raised 6 billion from issuing stock from selling their business, and they lost 1.2 billion from running their business. They have an accumulated deficit. So total equity, which is assets minus liabilities, that's 4.9 billion. The thin blue line is the price of this stock the past year, and it's pretty much flat in the past year. The silver line is the price of silver in the past year, and you can see how it really tracks the price of silver. It's almost identical, at least where it ended. And gold is up 15% in the same time period. If the price of silver shoots way up, so will their stock price. Same thing if the price of silver drops a lot, so will their stock price. It pretty much moves with silver. It's not going to be identical because they do make other products, and they're a company, not a strict commodity. So they have expenses, things like that. If you look in the past 2 years, silver is up 5%. This company's down 32%. So you can see it does move with silver, but it took a big hit in August 2022, and then they separated. And if you look 5 years, this stock is up 17%, while silver and gold are both up in the high 50%. And this company also pays a nice dividend, which is another reason it may not track the commodity. Because if they didn't pay a dividend, their stock probably went up around 50-60% like silver and gold. Let's look at the stock on Simply Wall Street. Its last price $17, market cap 6.2 billion, up 3% in the past week, up 1% in the past year. Let's see what they say about the company. Pan American engages in exploration, mine development, extraction, processing, refining, and reclamation of silver, gold, zinc, lead, and copper mines in Canada, Mexico, Peru, Argentina, and Bolivia. It holds interest in lots of different mines, as you can see here. They were formerly known as Pan American Minerals Corp. And changed its name to Pan American Silver in '95. Pan American Silver Corp. Was incorporated in 1979, headquartered in Vancouver, Canada. Simply Wall Street's at $26 a share. They say the stock is 35% undervalued. 2 analysts priced the stock at $22. They also say it's undervalued. Their revenue for 2012 was $928 million. Their revenue declined over the next few years, started increasing again. It was $830 million in 2019. Then the commodity boom, it jumped up to $1.5 billion in 2020. 2021, $1.6 billion. They're at the highest point now, over $2 billion for the 12 months ending 9/30/2023. Their revenue forecast for 2024 is $2.7 billion. 2025 also $2.7 billion. They only had $61 million of debt in 2012, down to $21 million in 2018. Then they added a little debt, $356 million in 2019. They paid that down. Very little debt in 2022. Then they added a bunch of debt for the big acquisition, up to $1.1 billion, but they paid some of it down. They're at $740 million. But you can see their equity is a lot higher than their debt, which is why they have a really good debt to equity ratio. And they do keep a decent amount of cash on their balance sheet. They currently have $386 million of cash, $741 million of debt. These vertical lines are their quarterly dividend payments, and they were paying 12.5 cents in 2014. They dropped it to 5 cents in 2015, then 1.25 penny in 2016. Then they started increasing again in 2017, increasing in 2018, flat in 2019, up in 2020. Then it was at 12 cents in 2022. It's currently at 10 cents a share. And you can see their yield is all over the place. It was over 5% in 2015, then 0.3% in 2016. Currently it's a little over 3%, and the forecast for 2025 is 2.4%. Only one insider activity in the past year, a buy for 1,000 shares. 57% of the companies held by institutions and 43% by the general public. The large ETF and mutual fund manager Van Eck owns 11% of the company. Then Vanguard 3.5%, Invesco 1.6%, and Morgan Stanley 0.5%. They did have more employees in 2012, 7,800. It came down to 4,000 in 2016. They currently have 6,200. The ticker trades on the New York Stock Exchange, TSX, Deutsche Börse, London Stock Exchange, Mexican Bolsa, and Buenos Aires. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.